Alright guys, well, welcome everybody. We're going to go through today what scalping is. We're going to go through some basics, how to apply it into the Forex market, and we're going to show you about three or four systems here that you can apply together or separately to be able to use to scalp the market. First thing we want to go over is what is scalping, and a lot of people have probably heard of scalping, and a lot of brokers. Most people are probably aware that they frown upon scalping. So one of the most important things about scalping is, of course, pairing yourself with the right broker. But what scalping is essentially is taking small increments out of the market. You're looking at 5, 10, 15, 20 pip moves, and you're looking at using small amounts of risk allocation to be able to make that happen. So you're using small stops and small gains. A lot of people use high leverage to scalp. With the thought that, you know, if you're only going for 5 or 10 pips, you can use a little bit more leverage. So basically, what you're looking at is just taking 5, 10, 15 pips out of the market in quick increments. Most scalping trades only last a minute or two because you're looking at momentum. And like I said, a lot of brokers do frown upon the thought of scalping, and I want to address that, and so everybody understands exactly what's happening. When you deal with a market maker broker, you have two different kinds of brokers that are out there. You have true bank brokers, or ECNs, which actually place your order into the bank market. And then you also have what is called a market maker, which a lot of times these guys do in-house orders, meaning that they're actually not sending your order to a liquidity provider or a bank, that your order is actually traded against their books in-house. Now, these guys aren't interested in scalpers. And the reason they're not interested in scalpers is because they cannot pass off those orders to the liquidity banks as fast as you're putting them in and taking them out. So if you have a scalper who's profitable, they're actually really taking a loss on those trades because they're not passing them to liquidity providers. Now, bigger trades, if they wanted to pass them off to a liquidity provider, they could do that, but they're not set up with speed of execution like an ECN is. An ECN is an electronic currency network where multiple brokers place orders. A broker places orders on multiple banks, and it actually, when you hit the button, it actually sends an order to a bank for a fill. But when you're dealing with a market maker, it's all internal, and they have to route it through their back end to the liquidity provider. And that's one reason that a lot of brokers do frown upon scalping. So this is an important part of this, is that you have to know what brokers you can scalp on and what brokers you can't, or else a scalping strategy will only work until you show yourself profitable, and then they're going to either start requoting you or slipping you or making it to where your strategy is really hard to use. Now, we also want to address pairs, and there's a lot of different pairs you could scalp. The things we're going to address today, I recommend pairs that have tight spreads. And the reason you want tight spreads is because if you're going for 5 pips or 10 pips, you don't want to have a 3 or 4 pip spread that you're trying to jump over to get that, because now the odds are extremely in the favor of your brokerage house and not in yours, because you've got to overcome a 3 or 4 pip spread just to get your 5 or 10 pips. So you want to find pairs that have tight spreads. Euro USD is one of my favorites to scalp. US yen can be scalped, and depending on your broker, even pound USD is one that you could scalp as well. We're using FX Pro, and on pound USD on a regular basis, we can get one pip, 1 to 1.5, which is something you can use to scalp. I mean, you can justify trying to get 10 pips with a pip spread. It's really hard to justify getting 10 pips with a 3 or 4 pip spread. So that's obviously something that you have to be aware of too when you're looking to scalp. So finding the right broker, finding the right pair, both imperative parts of getting set up to start scalping. The next thing we want to address is risk allocation. Risk allocation is extremely important in scalping as well, probably more so than picking the right broker, or they're about neck and neck. Because if you're not allocating risk on an ongoing basis consistently, you can get yourself in a position where you're winning trades, but you're still losing money. So having a set risk allocation system is important. I like to scalp using a 10 pip stop typically, and I look for 10 pip take profits. And so I'm looking for the exact same stop and the exact same TP. So I'm looking for a 1-to-1 trade on most trades I take. Now, there's a couple different systems that we're going to talk about later on, which is how to maximize profitability on a scalping system. But just risk allocation wise, you need to come up with a number that you're comfortable with, and I recommend starting small, 1/8% of your account or 1/4% of your account. And well, what does that mean? Well, we're taking total account equity, and we're dividing it by the percentage of risk we want to have. So if we want to risk 1/4%, we're looking at $25 on a $10,000 account. It's 1/4% of total account equity. Now, if we're looking at a 0.5% on $10,000 account, it would be $50. So again, you're looking at total account equity. And I also recommend keeping those the same levels, not fluctuating. We're going to show you how you can fluctuate to kind of create exponential growth. That's going to be something we're going to cover towards the end of the session. But I do recommend, at least when you're starting, trying to keep your risk allocations the same across the board. So if you're using 1/4% risk, you use 1/4% risk on every trade. After you get to a point where you're profitable, and you've been profitable, you can bring that level up. But starting off, it's always better to lean towards the side of error and know that you're more possible to lose money than make money. So don't risk a lot when you're first starting. All right, so we're looking at today. We're going to talk about using like 1/4% risk allocations and 10 pip stops is where we're going to start with. And the first system we're going to look at here today is going to be a breakout system, which let me go ahead and get this up on the charts for you guys so y'all can see my screen here. 1 second. Okay, now what we're looking at is this is a breakout system for scalping Euro USD. Let me roll this back a little bit here. And what you're looking at when you're looking at breakouts is you're looking at, when you first start a day, you're looking at new daily highs, new daily lows. But beyond that, when you start trending, give me just 1 second here. All right, so when you start trending, you can then use the previous pullback levels for breaches as well. So you're not just looking at daily highs and daily lows. This is a minute chart, guys, that we're looking at right now. And what we're looking for here is these levels of support and resistance. You can see that we tapped this level here and we backed off of it. Okay, so that's a level. When this level's breached, you're probably going to get upward momentum through this.